To Singapore, Lorraine Tan is Director of Equity Research at Standard & Poor's. Lorraine, thank you very much indeed for joining us. Well, what's your rationale for that?
Good morning. Well, I think what we're seeing is obviously the risk appetite is still coming back. I think with the U.S. recovery and with the expectation that the second half is going to bring about a little bit of an uptick as the Eurozone pulls out of its recession, that really should boost Asian economies and have a sort of an upward trajectory in terms of exports activity again.
Well, everybody's been waiting for a major pullback for those people anyway who had missed this huge rally that we've seen. That pullback hasn't really taken place in a substantive sense. Now, what happens next? Do people pile in when there's even a slight pullback now, and that comes to support this rally and give it further legs?
I think what you probably are seeing will probably be some rotational buying and selling. I think, yeah, you're right. I mean, we've seen a very shallow and much shorter pullback than we had expected. Having said that, I think whenever there's a chance, I think that people will start to pick up some of the stocks that they like. I think we're still advocating some of the cyclical issues to play on the recovery. But I think at some stage, without a more significant pullback, you're going to come to a point whereby you will see a sharper correction.
Well, tell us also a little bit about, what could actually ferment that. Would it be the price of oil? Could it be further problems out of the euro area?
Yeah, it could be. I mean, there's a number of things that we don't know that could come out. So obviously we have one eye on what's going on with inflation, given that oil prices are high, and that's particularly damaging, I think, more so for emerging Asia than it is necessarily for the U.S. at this stage. We've got still a situation with Iran. We've also got, number of elections coming up this year. So with what's going on still to sort of be encountered in Greece and France, etc.
Indeed, countries representing, I think, 60% of global GDP are either having some sort of administration change or having an election as well. So that, of course, provides a little bit of uncertainty. So in this environment, what do you buy and what do you stay clear of?
Well, we actually still have a fairly, what we would call a neutral to positive stance on the market. In essence, we still have an eye on the adding, I guess, cyclical names to the portfolio. And that's going to be led by things like, at this stage, our preferred high beta play is actually the real estate issues. We're actually taking the advantage to add some transport names because those are obviously reporting quite disappointing numbers, of course. But we do think that that cycle is bottoming out as well, granted the challenges with fuel costs this year.
Lorraine, very quickly, what about China? What are the prospects here? I mean, we've had J.P. Morgan, one guest that we have from J.P. Morgan come on and say just in about the last 25, 26 hours that there is no debate. China is in a situation where it's having a hard landing. What do you make of that?
Well, we're still in a soft landing camp. I think we're still hanging on to our growth estimates for China of coming in between 7.7% to 8.2%. I think what we'll start to see is as the global economy recovers in the second half of this year, you're going to see less drag coming from the export side, and that's going to benefit manufacturing. Of course, we have actually seen some decent upticks in PMI numbers globally, so that's also interesting. It needs to be monitored on whether that's a result of restocking and whether that can be sustained. But I think overall there are points to our view that yes, you're going to see slowdown in reinvestment internally in China, but at the same time that should be countered by stability on consumption and an improvement on the external sector.
Lorraine, thank you so much for your time. Thanks for stopping by the office there in Singapore. Lorraine Tan there, joining us from Singapore at S&P.